following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good Friday morning. Had a good week. Looking forward to a good weekend. I hope everyone's got some good things teed up. We're broadcasting from the International Space Station this morning, and I just made the background, as similar as possible in the space station. So we'd be on course here. That's true. All right. So the big deal today, obviously, at 8:30, jobs number, and expecting 5.1% unemployment rate. But as we know, the actual employment rate is starkly different from that number. And if you've done any studying on this, that those numbers are calculated in a very weird way, skewed towards showing more employment. A lot of people are underemployed in that particular scheme. Did I say the word scheme? Yes. But what we want to look at, really, all general markets across the globe and indices are going to be looking at this Chinese situation. And I've got our weekly grid up here. And what we're looking at, as we looked at this past week, 3312, that big breakout number on the Shanghai. And when these things start changing tone here and start trading above profiles, you've got to pay attention to it. And you've got to look at that as a kind of a sea change event of what's been happening since June, when this thing started getting cratered. So, it's an example of just sheer brute force by the Chinese government as really kind of, to some degree, in a real sense or unreal sense, change the situation on this index. But, they're starting to lift some bans on IPOs after 4 months. And, the globe is going to be looking at this as a positive sign. So you got to keep that in mind from a fundamental standpoint and a relativity standpoint when you're trading some of the other things globally speaking. But remember, this morning at 8:30, there's going to be a big number coming out. And, I'm suggesting, not throwing the dice before that number. We have no idea what's going to happen. And you always try to block out one side of the marketplace. You always try to think, okay, what if the number is better? Better. So that means, let's just say it's 5%. Notes and bonds might start selling off because of that alone. And then you've got, kind of this inverse relationship, better expected employment. Then you've got to look at, does the market like the better possibility of higher interest rates, because they might be leaning towards that. And, the market might be going, oh, God, the free money days are over. And there's a lot of things that are going to happen, whether it's up or down. If the unemployment rate's higher, obviously, you guys have done some thinking on this already. Notes and bonds may move up. Market may like that. Market may not like the unemployment report. My suggestion always is, let's just wait for the action to happen and let's trade the reaction. A lot of times there's, you guys have been doing this long enough. There's a pretty serious knee-jerk reaction immediately. And we talked about hitting stops and things like that. And might want to sit tight. That's what I'm trying to say. So the Shanghai, obviously looking good. The Shanghai is closed right now. And now we're looking towards this number. So let's go right into the S&Ps. By the way, you guys want to call in? We give the numbers out, and let me give those again. 877-927-6648 in the U.S. and internationally, 727-445-1044. Had some good calls yesterday, hopefully clarified some things for those folks. Feel free to call in, and we'll do some instant analysis if you guys have some questions about some instruments you were trading or just the broad market flow of things. So right now, S&P's up weekly, no new real significant changes there. Above profiles, 2045 is the big time long-term support right now. We've had a new profile again appear on the S&Ps. Give some new numbers out this morning. 2104 up top. We're trading about 2096 right now, 2096 and a half real time. And another kind of higher support number from the bottom of our daily profile. So that's the bottom of the fair auction where prices are fairly determined, 2063. That number lining up before used to be that 2042, 2045, which is a great base. So right now you've got new intermediate inflection points that kind of have the outside range on the top and the bottom determined in the so-called balanced area of 2104 and 2063. And if I go into my futures section of the scanner, I'm going to see those numbers, 2063, 2104, and I'm going to snap my landscape chart, and I'm going to see where the level of the market is by that yellow line and just kind of see where these inflection points all across the board actually are. Remember, we're going to go back into our, calculations here on our long term. Not a lot of change here on the breadth of the marketplace relative to the profiles. Just to give a little quick review, what does that mean? That means that we're calculating the number of stocks above, number of stocks below profiles, number of stocks within, and getting a very simple math calculation on the net positivity or net negativity relative to profiles of this breadth calculation. And as you can see, we go through this all the time. It's a very strong indication of whether you're supposed to be buying support still or looking at trading against, the trend relative to profiles and trying to find resistance. Right now, until we're told differently, we got to keep turning the wrench the same way relative to everything we just talked about, and that breadth included. For you shorts out there, unfortunately, of buying support. But remember this report, we want to see how it kind of pans out, and then give yourself a little bit of time and see where the adjustments as they've happened after the report really kind of take hold. So that's my take there. Let's take a look at the euro. Now, this is something we've been talking about. We've got a big report, obviously, and we don't have a weekly close below this number yet, 108.99.5, 109. We're gravitating slowly below there. Any type of strength in the dollar, obviously, there's about a 35% inverse relationship in the euro. The dollar is comprised of about 30 to 35% euro in an inverse relationship. So what do you do now? We're below profiles on the daily. We're kind of sitting below profiles on the weekly. Again, this is going to be a little bit of a ricochet action relative to what the treasuries do after this report and what the dollar does. So I'm kind of thinking you might need to just sit tight on this one. And again, any type of moves to the south side on this after this report, you might be able to jump the gun and start, pressing the gas pedal a little bit on the short side. And at the end of the day, end of the week here today, any closes below those weekly profiles are going to be very, very significant and very damning for any longs on the euro. That being said, let's go into the dollar. Tucker, I'll answer that in just a second. Let's finish with the dollar. And I'll go back to the ES chart. Again, we've talked about upward limits in a reaching type fashion up into the 100 area on the dollar. We've talked about, it ain't real cool to be short right now. I mean, we had this profile appear below price action. That's extremely bullish in general, and no new profiles attempting to appear up here. That could all change. If you're trading this before the report, again, might be a good time to clear the deck. If you've got some decent profits on the table, no matter, if we don't have any inflection points hitting here, on the grand scheme of things, we've been relatively right on the dollar lately, and you don't want to just throw that away by rolling the dice during a report. Still, long-term view on that is north for long-term investors who are not kind of in and out of the marketplace. Let's go back to the S&Ps real quick. Okay, and you're talking about this purple bar down here, Tucker, on the navigator. That is a hint that we may be starting to get overextended. And that is relative also literally towards the previous bar. So not only, I'm glad you brought this up. I mean, I like to see, as you can tell here, I like to see, a little bit more than, one bar appearing on the navigator like that. But what it is, our navigator takes a lot of things into consideration. Basil was asking some questions about this the other day, and they were great questions. What is this? Just a histogram, MACD, whatever? No, it's not. It's actually a combination of quite a few things. And as this culmination of moving averages and some momentum indicators and a couple of things having to do with profiles, we look at the zero line, we look at magenta bars, we look at changes in tone from bright red to dark red. Right now, this is kind of a neat situation. The thing that scares me, though, is this report, and also, we're just kind of sitting around all-time highs here and not really wanting to kind of back off of those in a violent fashion. That's what you want to see. And a lot of times when this happens, and Larry and Basil and everybody else will tell you this, usually this type of scenario, we might get a spike up before we kind of come down. And have any trading opportunities on the south side. But right now there's a magenta bar, there's a new profile appearing. You got a little bit of things in your favor on the short side, and that's kind of what that means. We are making this more real time. The navigator now, I hope by next week, will be changing real time. Right now it's kind of on a closing basis, which is okay on the long term and the short term in my book. We've used it significantly in that fashion. I'm going to look at silver really quick. Gold and silver had a question about that. And we're going to take a look at January beans a little later. Let's look at gold first. We got very, very close. Talked about yesterday, kind of waiting until we got into that, had a caller call in, 1099, 1100. We reached a low yesterday, 1102. On gold and the volatility of gold, you kind of got to give yourself a little bit of noise factor entries and exits on this thing and stops. I don't know if I'm going to call that satisfied because we really don't have any new profiles attempting to appear here. But remember, that report coming out is going to kind of herky jerk this thing around. I'm not really a big fan of being in this before that report. Again, trading the reaction. Looking at December silver really quick. You're welcome, Tucker. Ouch. Kind of similar to gold, but even, in my opinion, relatively weaker. Right in the middle of a fair auction on the nothing to hang on to on the weekly, and on the daily, no new profiles attempting to appear. Again, this thing could spike up if you guys get long before the report. It could also crater significantly. So again, the flavor of this is, and here's the 240s, short term 1508 up top. 1593.5 down below. Those are the short-term numbers with silver. These are all given in the scanner. Guys, we will be right back. Stay tuned.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Got a big report coming out in a couple of minutes here. I got about... what is this, 5 minutes before we take another break. Want to reference the scanner 10-year note. We see a yellow peel back happening on our scanner. There's a hint on the daily section. There's a hint of a new profile attempting to appear down here. This is our daily. Remember, weekly we're sitting below profiles 2711. Trying to find a new. See that little yellow thing happening, and you'll also see that in the scanner. Peel back. What does that mean? That means you go over here and hit that, and it'll tell you caution to shorts, targets may be met in the interim. Got a new profile attempting to appear here back and forth. That report's going to kind of destroy a lot of immediate short-term situations that are going on because we don't know what's going to happen there. But those are the numbers. That's the situation on the 10-year with this unemployment report coming out. The short-term numbers, if you want to know, here's the situation on the 10-year. 126.24 down below, 126.01 up top. I'm going to, just say that those are too tight a range for what's going on. We're going to have some probably more than normal volatility here. 30-year, we're going to opt out on that right now. We're going to look at crude oil really quick. December contract, had a little support area, 46.31, caught a little bit of a bump there, and that was a heck of a reversal. That was not the type of action you want to see after we break out, obviously. And that's what stops are for if we're in that in a long-term fashion. We didn't quite reach the targets up top of 50, but had a pretty good move, actually, north the other day. So 46.31, we're just going to have to get back above there on the long situation. And that 46.31 is very, very close to that 46.30 PSC. So this is going to be the rocker arm on the long term. It's kind of like the top of the mountain, fall down one side or the other. So right now, what do you do with crude oil? I think you just got to wait on the long side till we get back above 46.30, 46.50, that general area. Preferably a daily close would be nice there. All righty. So let's go back to the yen. We've talked about this getting back north of 122.5. We had some, kind of good news situation on the intermediate, getting back above 121. We'd really like to see this thing get back into long-term profiles and just kind of, the long-term guys, that kind of will be the better entry point for guys who are day trading this. I think you could lean off 121 there on the long side. We're going to hit the NASDAQ numbers really quick because I know you guys are going to be kind of looking at this after the report. Long-term, there you have it. No new indications. Here we go. Here's the numbers, 46.60. 46.60. If we can get below there, I think we might have some short contra opportunities down into 45.72. That report's going to be the big deal. But remember, all problems are over there. And the bully government intervention has seemingly held the tide back for a while. So remember that. I mean, we've got some not so terrible fundamental news out there when it comes to that situation. Let me change this. Every time this thing reboots, it goes back to September. I don't know why. Looking at the DAX, here you have it. Big number here. You got to get through at 10,891. Going to have a weekly close above there to get really bullish on the long term again. We've had some intermediate reasons to kind of use some of these daily profiles to leverage on the long side. If you can see that, got a new profile that's appeared yesterday. Just to blow that up, 10,944 down into 10,717. We're right in the middle of a fair auction here. So 10,944 is going to be resistance and support's going to be 10,717 on the DAX. And I'm not exactly too directional on the DAX right now. Put a gun to my head, I'd have to be long and buy support at 10,717. All right, we're going to look at January beans. This is a ugly situation for longs. Here's our intermediate. We just daily couldn't, rattled around below that profile. That's just bad in general. 885 a bushel. Now we're down to 865 today. That was a big bad day yesterday. And guess what? We could have a close below weekly profiles at 871. So those are big numbers. Very damning for longs here. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Obviously had the knee-jerk reaction. They were thinking good news is bad news for the market. The rates getting raised a quarter point is going to kill everybody. But as you know, that's the electronic kind of reaction to this immediately. But I think cooler heads are going to prevail. This is actually very, very bullish in my opinion. And looking at the 240, we got down to these short-term numbers, 2082 on the short-term inflection points. Here's the daily. Not a lot of change here. In fact, the S&Ps are down like 1 right now, 1 or 2 points. The bonds, obviously, this is just incredibly south side news for those things. Here we go. Here's the daily situation. I'm just kind of running through some of the products as they're trading here. You can see the short-term 60s and 240s getting cratered here. So adding 271,000 jobs and a 5% unemployment rate may finally push these guys over the cliff. And then the stock market's obviously saying, oh, my God, they're going to raise rates. It's the end of the party. But remember, there's a decent stance in China, the U.S. economy that could be construed as people having more money in the economy. Here's the euro. The dollar's just screaming north. Here's 109. I think we're going to get this weekly close below 109 now. That looks like a foregone conclusion. Here's the daily on the euro. I'm just running through some of the usual suspects here, guys. Here's a 240. This is all euro related. Let's take a look at the dollar. I think this thing actually spiked up almost to 100. We were talking about that being somewhat the target. And here's the daily situation on the dollar. We talked about the leverage being on the long side here. If you're trading S&Ps, it's going to be a little bit of a tug of war here, but I actually think we're, possibly going to end up being positive today. I mean, there's some headwinds, obviously, with that new profile, the magenta bar that Tucker pointed out, and a new profile sitting there. Let me see who's trying to. Just having somebody monitor something here for me. So that's the situation on the S&Ps, the bonds, or excuse me, the notes, the dollar, the euro. Let's take a look at gold really quick. These are real-time prices here. Again, talked about waiting, being out of the market. If you're trying to get long gold, I know those numbers, like super volatility here, without question. We're coming into a big number here, bottom of the profile on the weekly. So yesterday we talked about waiting, and now we're talking about being out of the market with the report coming in, and now we're talking about a big inflection point at 1086, 1087 down here, and we haven't hit that yet. We've hit a low of 1090, it looks like. So if you're thinking about trying to nibble on the long side on gold, I don't even know if that's an area to nibble on based on those numbers that came out, but you've got a trading opportunity on a very short-term side, in my opinion, around 1086, 1087. Jay, I think you're hitting on somewhat the right tone there, taking a shot on some of the numbers on the long side on the S&Ps with this knee-jerk reaction down. Let's see, 9:30 comes around. I think we're going to have to kind of look and see how some stocks open. I'm going to go back to the treasuries really quick. Seems like they've settled around this area right now. Nothing to hang on to down here. There were no reasons to get long before that report, no inflection points, but right now you still don't have anything down here to play around with. Should you go short this as it's broken down and possibly a weekly close below 27.11, I think you just got to sit tight and wait for some inflection points to appear. Some of the prices in the scanner are just, we've got a lot of activity. A little bit slow there, pre-market. Rick Santelli might get his wish finally. All right, let's take a look at the DAX, see how that's operating. Driving a little bit higher here. I'm sorry. Not a lot of scary situations really for the longs right now. Okay, so those are the numbers after that report. I want to look at Disney really quick. Let me get this up. Had some earnings yesterday, had some emails about this. In my opinion, 112.46, unfair highs support down to 111. I think that's a decent collection area here. Here's Disney. I think you can orient stops below there. Stops really have to be oriented below 108.65 on the long side on Disney. The reason I'm also looking at this the way I'm looking at it is we go into the scanner. We still had these, breadth positive long-term situations. These are a little mixed up on the short-term pre-market here. Not a lot of these stocks have opened. That's the situation on Disney. Had some earnings yesterday. Let's take a look at also Shake Shack, SHAK. This is a confounding stock to me. Here we go. Decent news, 44.94. Let's call it stops below 45. We may have some follow through on this particular stock. As you can see, kind of finally broke stride On the downside, there's a lot of people short this stock, a ton of people. So this thing could kind of do a little bit of more of a squeeze with some market help, possibly heading north. Going back to the S&Ps, this is still the reaction here. You got big support on the long term at 2063 on the S&Ps. Remember that. You got, shorter term support on the 240s at 2082 right there. It's already met that. There's the long term, 240 regulator of the trade up that's happening now. We still haven't broken below 2082, the short term guys. 2063 is the big, in my opinion, back up the truck on the long side number. Let's take a look at another stock that was in the news yesterday. KHC, Kraft Heinz. E-signal's a little slow right now. So a little bit of sell-off, 2% sell-off. What do you do with it now? Here's the daily situation. Not a lot of movement here. Long-term, 75, 73 getting back above there. I think this is not a bad long-term nibble on the long side play on Kraft Heinz. Let's take a look at something else that was in the earnings scene yesterday, Celgene. And here we go, 120.34 looks like 120.34 pre-market. And you had some south side move down into 119.20. I think this is more than likely a buy with that as support with stops down below. We might not make a run for all-time highs right now, but I think as soon as all this is digested and a quarter-point raise might be in the picture moving forward. Not the end of the world for the U.S. stock market. Let's take a look at, let's see, I wish these financials would open. Let's take a look at some financials, see how they're acting pre-market here. JP Morgan. Yeah, I mean, these spreads widening are as we've been talking about, not the worst thing in the world for the banking stocks. Let's look at Bank of America really quick. I think these are open. Are they open? 1106, 1106. Yeah. Not really being rattled. Let's take a look at Citigroup. Now let's take a look at the XLS, see if this thing's printing. I don't think this is open yet. Maybe. All right, let's re-look at gold here. How low have we gone? Let's just see. 1087 and some change, low print. 1086 and some change is that unfair low on the weekly. If you're doing some day trading, this might not be a bad area to try to take a nibble, put stops down below there. Let's take a look at silver. All right, so silver got hammered. 1474.5 unfair is the low print on silver so far. Talked about this is kind of in no man's land. There's just nothing to hang on to here on silver. And actually, you've got a weekly print, or excuse me, weekly unfair low. 1445 up into 1460 that I would, more than likely wait, see if that thing gets down in there to even start thinking about nibbling on this. So silver's kind of a wait and see on the long side. Let's take a look at the euro again. Just keep you guys up to speed on what's going on pre-market here. This is kind of everything we were hoping for, is for this thing to start cratering and catch some momentum below 109. That's happening. We're about 150, 170 pips south of that. We've talked about this resistance areas to sell and breakdowns to sell. Now you can use 109. Any retracements back up into there, as it happened yesterday, actually, lay the wood to it on the short side on the euro. I think this one is going to be one of the coolest trades out there. Here's the dollar staying strong up here. I think we can get into that 128.29 area on the dollar. Raising rates strengthens this currency without question. Let's take a look at some other currencies. Let's take a look at the Canadian dollar. This is something that we've been able to try to look at from buying support. Here's the long term on the Canadian dollar. We've talked about this, buying any pullbacks on it. We're coming up into some resistance here, 133.04, top of the profile. We've come off again. I think this thing's going to go higher. I don't think it's time to short this. Excuse me. That's the scene on the Canadian dollar, and buying breakouts again above 133.04 are probably going to be in order here. Australian dollar, we've talked about looking at this from the short side, but we have had some reasons to not really get heavy on the short side here. I still feel that way about the Australian dollar because of this divergence. I think there's better shorts out there on a relative scene relative to the U.S. dollar, so I'm passing on the Australian dollar, even though we're having a massive sell-off right now. All right, I'm just trying to get you guys prepared globally here. All right, so let's go back into a couple of stocks. Let's look at BlackBerry. They're releasing more and more Android versions. This thing's a pile of crap, and I'll tell you a story. My BlackBerry actually blew up when I landed in Asia this past time. Might be the eternal short still, but what do you do with it? A $7 stock getting back below 738. I think are shorting opportunities on this right now. It's not there. Let's take a look at Apple. John from Philadelphia, I'm with you on the silver trade. I think you just got to wait and see on that. Just sit tight a little bit. In case this thing goes a little bit lower, then you might have a higher probability scenario sitting there. Pre-market Apple 121.21, it looks like. Apple's got a profile going to appear here more than likely on our daily, so I think that's a little bit of an overhanging mess there for Apple. So those are new inflection points we can pay attention to. Right now we got to sit tight on Apple. Let's go back to the S&Ps. In my opinion, I think they're kind of sitting there, and there's a bid in the marketplace for it. This is my opinion. Make sure you put your stops in on the short term below 2082. But I think when the stock market opens, this thing is probably going to be a little bit more of a long trade than a short trade. Got about 30 seconds left for our before our next break. Everything's still the same on the treasuries, rising up a little bit. A lot of guys are going to be leaving early on this particular trade on this type of Friday. So volume may dry up on this. All right. Let's take a look at Amazon. My goodness. Here's the weekly on Amazon. Here's the daily. Things on their highs go higher. Do not try to short this right now. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Had a big report come out. A lot of things moving around. Pulled up some stocks. Let's just review Euro South. Big number. It eclipsed 109. Got to use that as major long-term resistance now. S&Ps are kind of sitting around south a little bit here. Some people could be taking some profits on so-called good news. You got to watch out for that. You got to watch out for some momentum going down, but you got some inflection points to pay attention to. 2082 and more importantly 2063. If we get some guys that are just kind of, the good news is the bad news, I'm going to take profits now. You got to kind of always watch out for that. But I think any pullbacks into major inflection points, you've got to be willing to, look at that from the long side. I don't think a quarter point rise is going to be something damning for the U.S. stock market, considering China's kind of getting their act together and everybody's starting to feel rosy again, that the world is picking up. I've got a webinar coming out on November 12th to really run through this scanner. It's hard to kind of get your arms around the whole thing in an hour. We're going to try to extend it past an hour. We're going to figure out how to use this breadth to your advantage, drill down into the instruments, use the inflection points, find opportunities. I'll have a bunch of canned filters in there by this coming November 12th as a build that you can download. Really looking forward to this. I hope you guys can attend. And I guarantee we'll have a good time at that webinar. Very informative. So that's the situation on the S&Ps. The notes we've already covered. Gold we've taken a look at. A big number down here at 1086. We've hit a low of, let's just see, 1080. Well, the reason this is a big number, here's the weekly, and here's this big number down here. We've come down a long ways. We've come down from almost, in less than 2 weeks, we've come down from 1183 down to 1080, almost 100 points. What does that say? It's about a 9% pullback in gold. You've got a big inflection point down here to orient stops around. Get rid of this. And on silver, we need to just sit tight and wait until we possibly move a little bit lower. Here's a December contract, just to reiterate that. Here's the big numbers down here. I think a collection area between 1445 and 1460. So that's a sit tight and wait on silver. Let's see if we got some of these ETFs even starting to nibble here. Yep, just like we expected, the XLF spiking up, loving the increase in rates, which would kind of unflatten out the yield curve a little bit, and that's where these banks make most of their money. Let's kind of relook at some of these banks. JP Morgan, I don't think they were really quite open before. Yeah, as expected. Here we go. BAC, similar situation. Okay, so taking a look at crude oil. Okay, so repricing itself in a stronger dollar, 44.79 right now. We're at a POC on the daily, bottom of the profile 42.76 on the weekly. So what do you do with this now? This is kind of a precarious situation that crude oil's in. I think you got to sit tight on this one, wait for some better inflection points to appear. It's kind of in no man's land, right in the middle of a fair auction now. I don't think you have any leverage. Plus, if the dollar continues to rise by default, this may actually continue to sell off. Guys, you've been great. Hope you have a good weekend. Get signed up for the webinar, and I'll see you next week.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.